Awesome. Hello, ladies. Good morning.
Good morning.
Good
Sorry, it took
morning.
me a moment to get you all in there. I had a call from somebody in Charleston. So it was like obviously 5 seconds before I had to start a meeting.
Of course, it always works that way.
Anyway, um, so Stephanie said that you were a lender in Charleston.
Yeah, that's what I was gonna say. If you guys have any questions on the type of lending, because I know Stephanie was asking me about DSCRs and I-10 loans, which is funny because those are two loans that I'm closing next week. I-10 loan and a DSCR. If you have any questions on those, I've been doing those types of loans for, I mean, over 15 years. I've been in the mortgage industry for about 19 years. So I've been here for a while, and I'm down here in Charleston. Yep, that's correct. Serving all of South Carolina, plus the other states of the union.
ITN, what is the interest you're right now closing on those?
IT, and it all depends. It all depends on the credit, income, and ratios on IT. Those especially depend on those numbers. Right now, the ITN loan that I'm closing next week is going to be at 8.99. It's a investment property cash out refinance.
Oh, it's a cash out. Okay. But a regular, do you are asking for down payment for owner occupant?
Down payments on I-10 loans are start at 20%. So that's what I have.
Okay. They require how many, 2 years of tax returns?
So for an I-10 loan, you could do it's 2 year tax returns. So you have to have the 2 years done already. You have to be in business, or usually I-10 loans. Most of the people, like 99% of the people that I've done I-10 loans, have they're self-employed or they're 1099. So and that's I mean that's common sense, because if they have an I-10 number, they don't have a social, so that means it's hard for them to get a W-2 job. So most
Mhm.
of the people who have the I-10 numbers are self-employed. So 2 years self-employment at least. I do have a company that will accept 1 year of self-employment, but that's you have to have really high credit. They had to have credit above a 650 or a 640. So just like any other loans, these loans are the same as when I say if you don't have credit, it's easier to give you a loan than if you have bad credit.
Mhm.
So this is the same thing. If you have good credit, great. We could work with you. But if you don't have any credit, I've known a lot of people. They have I-10 numbers who haven't started their credit journey yet, and so they have zero credit. So I have a lender, or I have a bank who will allow you to go ahead and get an I-10 loan even if you have zero credit. What we do is we do outside sources like telephone bill and stuff like that, where they've been living. If they've been renting, that would be a credit line. So we use that. You have to have at least 12 months or 24 months of renting if you don't have any credit.
Okay.
Any other
Uh,
questions?
most of the
Taking
time,
notes.
most of the time they will require that, well, yeah, most of them will have enough money. But one of the things we have right now a listing that is double wide.
Uh huh.
So I think last time we checked, they couldn't do ITN loan with a double wide. Do you have any?
Yeah, we could do mobile homes. It has to be a double wide.
And what else are the requirements they need to?
If it's gonna be a mobile home, it has to be a double wide, and that's basically it. Mobile home, double wide, and just regular stick built home. Really, it's not requirements. If it's a house, it's a house.
Well, they don't need any extra down payment for a double wide or
No, no, it's 20%.
okay, 20%.
Mm-hmm.
Because we had a lot of people asking. We had that listing under contract, and the people just couldn't get the down payment. So it's gonna be, I think today or tomorrow, it won't be fall off entirely.
Mhm.
So, but we had a lot of people asking that had ITN numbers. We had a
Right.
so
Yeah, there's a lot, and that's one thing. When I started this business 18 years ago, I started doing the business and stuff, helping people get into homes. Then I realized there was a huge, very big need in the Latin community on helping people get into a house, especially down here in the South, especially in Charleston. So I went out and I started looking into how can I help people, especially people who don't have a social, have I-10 numbers. So since back then, I've been researching and stuff and putting it together. So now that we are pretty good, pretty confident at the I-10 loans, where we know exactly what we need. You need at least 20% down, and that's because of the way the bank looks at the loan. They have to reduce their risk on it. So that's why they put 20% down. 2 years tax returns and credit. Those were the main things that you would need. Would be the 20% down. Have to show that where the money come from. Of course, you have to source the money. Two years tax returns and credit has been the main things. Things that have changed recently have been the fact that now you don't need to have credit. You could actually we could get you into a I-10 loan without credit just by doing secondary credits. 20% still there. And now there's other lenders who will do 1099 or 1 year of tax returns. So those are the only things that have changed in all these years. But it's still main thing is a 20%. You have to have at least a 20% and show that you're going to be able to pay the whatever mortgage you're getting into.
any questions?
Yeah, I do have a question. Did you say something about land too, or no? I don't know if I heard you right. Okay. So no financial land. Okay.
It
No,
has to be. It has to have some kind of fixture on the property in order to be able to finance it as a home. So, not talking about I-10 loan, just a regular. Let's say a regular loan. Let's say an FHA loan. If somebody says, "Hey, I have this house right here. I have a foundation, but the house is falling apart," you could always get a 203K FHA on that house, and even though there's not the house is falling apart, you have the foundation. So if you have a foundation on a property, then you're able to buy it as a with a 203K, for example, because you're going to put money into to build it in. It has to have a foundation in order to be qualified as not just land but a home being bought.
Even if it's like a tear down, like a complete tear down,
hmm
it
As
would.
long as it has foundation, you can qualify for. Well, the borrower would have to qualify for that 203K.
And what are the requirements for that loan?
203K is basically the same. This all goes by DTI, credit 680 and above, and just source 2 years of income. Um, when you're talking about those type of loans, it's basically more about the income. If can the borrower afford to get into that loan into the house they're going to? Because they might buy the house for let's say 150,000, but after the repairs it'd be worth about 250, let's say 300,000. And so you had to be able to afford that type of house to get into it.
And then I had another question too that I had asked you through Messenger is the hard money loans. Do you,
hmm
you said you had access to that as well, right?
Yeah, that's the last straw. Basically, what I tell my borrowers, right? If I can't get you in a regular loan, then we go and look into a hard money lender. I always caution my borrowers on hard money lenders because, of course, they're hard money lenders for a reason. It's called a hard money because it's very expensive. You're not going to find anything very cheap on a hard money lending process. The process itself is expensive. Usually, you have 2 to 3 points up front. Usually, the interest rate is anywhere from 12 and up higher, and usually those hard money loans have a balloon payment from 6 to 1 year.
are those available for owner occupant or only for investment properties?
Only for investment properties.
That's what I thought.
hmm
uh, Yeah, hard money loans, girls, it's never gonna be for personal property. Never.
No, you don't want to do that anyway. You don't want to get into a, if you're buying your property, your primary residence, you don't want to get into it with a hard money loan because it's going to cost you extremely amount. The the reason why somebody would get into a hard money loan as an investment property is because you know you're going to make money off that property. So if you're going to make, let's say you're making $10,000 just for a number, but the hard money loan is going to cost you 8,000. Well, you have at least 2,000 you're making there, so you do have a positive income coming in. Um, and those are just numbers I'm throwing out. Those they don't mean anything. They're just numbers. So a hard money lender would look at, I have one lender who would look at the project itself and they'll say, okay, it makes sense. There's money to be made. We'll give you the loan for that. There's other hard money lenders that look at your credit and see, what kind of project you get into, and then they decide like that.
Hmm. Well,
So
are you brokering with Flatiron or who's did you broker with?
who am I with? The company?
Who you are brokering the hard money loans?
There's several. There's like 10 different loan hard money lenders that I have down here in Charleston that I work with. One of them is Green Money. Another one is called Old Charleston Money. It's all private money.
So those
That
are private money. There's no the companies like Flatiron or
no, I'm
KP or
not.
any of
No,
that.
no,
You don't broker with those. That's what I
no.
was asking you. Because
Okay.
I am familiar with the private money lender because I renovate houses.
Mm-hmm.
So that's a different story.
What was the difference between the brokered and the private?
Well, private lender is basically just like a, for example, I could know somebody, right? And they have $500,000 in the bank, and they say, hey, and you have a borrower who says, hey, I want to get into this investment property for 150,000. So the private lender will come in and say, okay, I'll get you the 150,000 with a balloon payment at in 6 months at a rate of 15%. So we'll go with through the attorneys and we'll get the loan coming in through the private lender. And it's just a person basically with a lot of money. And it's just as simple as that. It's not, I mean, you don't have any disclosures or anything like that. It's basically the two people meeting each other and say, I'm gonna borrow you the money because I see your project is good. And the other person that says, hey, I'm gonna finish the project and I'll pay you the money. And then we put in with the attorneys and the attorneys finish the title work and everything.
It's like Adrienne. You remember Adrienne, my friend Adrienne? That's a private lender. That's somebody that has money, or like Karen,
Mhm.
that they can lend you the money directly.
Okay, okay.
Okay, a company like Flatiron, they have a set of things that you have to comply in order to be.
It's like a mortgage.
It's like
Yeah.
it's a mortgage.
Yeah.
They still do loans like that for investment, and it's the same when they would do it for a year or
Yep.
well,
It's
actually,
just
all of them
expensive.
do it for a year, but it's
Yeah.
expensive.
Yeah. It's just expensive.
For these companies, usually you had to meet scores. Private
Mm-hmm.
loans, not necessarily.
No.
So what
They
requires
are the private loans will be more expensive than the companies
The
because,
less, yeah. Mm-hmm.
okay, there's a lot of companies that do actually, I forgot the name of that company that keeps sending me emails. They're looking for lenders to broker with them.
Oh yeah. Okay.
I'm just telling you, you want to get that one.
Right.
Uh,
Right. Right. I hear you.
uh, they
Y
keep
todas,
calling. They keep
todas
sending
tres,
me emails about, oh, you want a broker? I'm like, dude, I'm not a broker, but
las tres hablan español.
uh-huh.
Todas tres, ok, perfecto.
I can't remember where to go.
Oh, but really quick, the hard money, the private ones that you work with, do they ask for like certain requirements or do they have?
It's basically, let me see your project. What does your project entail? So if somebody says, hey, I'm trying to buy this house for 200,000 and I know that I'll fix it up and then when I'm done, it'll be worth 250,000. Private money lender is going to say, not enough money in there to be made for both of us to come out real well. Now, that's what I'm talking about. Just look at the project itself. Um, And then if the project makes sense to them and there's enough money to be made by both, then yeah, they'll go ahead and move forward. A lot of times the private money lenders will look at the project and see if I make my money, are you going to be left with somebody to make too, or are you just going to make transaction? It's going to be a transaction for you. And if it's just going to be a transaction for you, you probably don't want to do that anyway. You don't want to give it somebody a whole bunch of money just so you could just learn. You know what I'm saying?
So they also look it up how much experience you have.
Yeah, exactly.
The most
Are you a new investor, or is this your first property? But if you're a new investor, okay, and you have this new property, this new project, and it's fabulous, and there's a lot of money to be made, yeah, they'll say, yeah, of course, because the project makes sense, and that's why I go back to they look at the project rather than the person. See if the project makes sense. If the project makes sense, then they'll move forward. If it doesn't make sense, or even if sometimes I haven't seen it, but I'm not even gonna say it's mostly the project. They look at the project and see if it's a good project to move forward with.
And this will be just for like flips, like just where you could get the money right, you know.
Right.
Like
Right.
that.
Flips or rentals. This all depends on the investor what they want to do. If they want to keep it and flip it, great. If they want to keep it and then refinance it, because you could always get into an investment property with a hard money loan and then within 6 months or a year refinance out of it and put it into a regular mortgage, a DSCR loan maybe, or something that you don't have to get out of it within a year. They give you 30-year mortgage basically.
Yeah, that was one doubt that I had because I was wondering how it would work for somebody that wants to go in there, repair, and then rent it out.
Yeah, that's what you do.
You gave me the answer. It would be to refinance, right? To be able to pay the
Mhm.
lender
You
back.
got to do 2 loans.
I'm sorry.
You have to do the 2 loans. You will be the harmony loan, and then you do a cash out refinance or just refinance in a DSCR.
When the balloon payment is up. So
Yeah.
you go into the house and you buy the house with a hard money lender. If we're talking about hard money loans, so and your plan is to make it into a rental property, you want to start a rental portfolio for yourself. You start with your house with the hard money loan, and then once you're done with the house and you had the value you want for it, you finish um, putting everything all together and everything, then you refinance the house so you can get out of that hard money loan, and then you get into a regular mortgage, which you pay every single month. Um, and mostly those mortgages will give you up to 80% loan to value on the house. And the reason why 80 is a magic number, because if you go beyond 80, then you're looking at mortgage insurance, and you don't want to get into mortgage insurance when you're investing.
I have a question. The hard money loans, how do the payments look like on that? I know it's based on the project, but if on a mortgage it's like regular monthly, then what's it based?
So there's several ways that they do. Well, actually, no, there's two ways they do the payments. Okay, so one way is you borrow. Let's say you borrow $100,000 from this private lender, okay, and they give you a year balloon payment. Okay, two ways it would go. What they can handle that is every month you would have to pay an interest only payment on that loan until you get to the 12th month, which is now you're due on the balloon payment, which is the whole payment, right? And that's when you go and refinance, right? There's another lender that I know that what they do is they basically say, here's the money. We'll see you in a year with interest and the payment. So there's two different ways. And it's all how the borrower feels and how comfortable they are. What they want to do. Um, what I usually do when I go into with a borrower and find out that they're getting into investments, I want to know what their goal is. Are you looking to flip, or are you looking to set up a rental portfolio for the future? Right? Because depending on what your goal in the future is what our strategy would be today to get you there.
Mhm. That makes sense. Thank you.
Mm-hmm.
Well, I got my questions answered.
All
Thank
right.
you.
Anything with the DSCRs?
Um, Celia has explained the DSCRs pretty much, but I don't know if you guys do anything different other than, what it's traditionally like.
Yeah, DSCRs. I tell everybody that it's easier to buy an investment property when you already have your house. It's harder to buy your first house. Once you're into your first house, it's a lot easier to buy a second house and a third house. It gets so much simpler. But it's the hardest thing is to get into the first. I mean, you have to get into that first, project, which is your own house, in order to understand what it's going to take to get to other projects. So yeah, DCR has made it a lot easier to get into investments. And I got into a lot of DCRs, especially in the past couple of years, especially last year, because the interest rates were so high. People were actually, people were waiting for interest rates to come down before they went and bought their primary residence, which is okay. I understand what you're doing, but you also got to look at when somebody always asks me, they say, hey, when's the best time to buy a house? I always tell them, hey, the best time to buy a house is yesterday, but you can't go there. So today is the next second best time to buy a house is today. Because even if you pay your interest, the higher interest rate today, tomorrow that house that you buy is going to be valued more. So if you wait, if you wait 6 months and then the interest rates come down, okay, within 6 months you want to go buy that house. That house is going to be cost you a lot more, not because now at the value you got 6 months it is really appraised higher, but because you have probably another 100 other buyers who are jumping into the pool and say, hey, we're ready to buy too, because you have a lot more buyers, a lot more people wanting the same house. That house is going to go up. And that's what was going on back in 3 years ago, where there was a house for, let's say, 200,000, and you had 50 people bidding on it, and then the person who bought it for 300,000 because everybody wanted to get that house, and everybody was bidding over it. Today that's not happening anymore. But that will happen if the rates come down. People are waiting. People are waiting to buy a house, and then the rates come down, then they jump on it. But you also got, like I said, other people jumping out on the same house, and that house is going to go up. So the best time to buy a house is today, always today, because even if the interest rates are high, because you could always refinance in the future if the rates come down. But you're in that house now, and you're getting the value of the house. You know what I'm saying?
Yeah, definitely. Yeah.
All right.
Yeah. One
Well,
last
you
question.
guys have my information. You guys have anything I can help you with when it comes to mortgages and financing, even credit. I've been working on credit I remember the first time I saw a credit report about 20 years ago, and I was like, oh my God, what is this? But now, doing it for such a long time, you look at the credit, you go, okay, I know exactly what these people need to do in order. They want to raise your credit or they want to start credit, because credit is very important when you go buy a house. Unfortunately, you have to show people that you're able to pay. You have a history of able to be able to pay. So that's what the lender's looking at, basically, right? So, yeah, when it comes to the whole process of purchasing, either for your primary residence, you have to have a plan, or if you're looking to get into investment properties, you have to have a plan. So that's one thing I always like to do is talk to a borrower and get a plan together and find out what is it they're looking for. What's their future goal, and what's the end game? What are you looking to get out of this? And then we set up a plan to get you there.
Sounds great.
All right.
Get it right. Yeah, thank you so much.
How do you start? Because a lot of people, what they do is like, okay, you want to buy a house, and they laugh. Like, yeah, why do you laugh? Because they have in their minds, there's no way they could buy a house. There's no way. When I know, because I've been doing it for such a long time, that I can meet somebody today, and the most amount of time they would have to wait if they have nothing, if they have no job, no credit, if they don't have anything, the most time they're going to have to wait to buy a house would be 2 years, because within 2 years you'll have everything you need to be able to show the lender, hey, I could buy a house, which is a 2 years income. You're going to have to save a little bit of money within 2 years, and within 2 years you do credit. Now, a lot of people that I meet, they already have a job, they're in credit, they already have some kind of credit, and they already have a little bit of money in the bank. So what I like to do is teach them how to get out of being scared, because this business, we do it all the time. We do it every day. So we're more knowledgeable of what's going on. But somebody that's getting into this and seeing everything you have to go through, it's scary, you know? And so I understand that. So there's a lot of people who are maybe a week, maybe 2 months, maybe 3 months away from being able to buy a house, but they don't realize it because they're so scared. They don't even want to look at their situation. So it's about a lot of this business about educating people and showing them that, hey, there is ways to get you into a house if that's what you really want. I have no notes. It's because I've done this for so long. I could talk about mortgages. We could sit here for at least another hour and I could talk about mortgages because it's just something I've done and I'm so passionate about. But when my knowledge, I let you guys give you my knowledge and give everybody else the knowledge. That everybody wants the knowledge, but it's hard for people to hold their hand. You got to hold somebody's hand a lot of times. You got to hold their hand and show them, hey, we can do this. It's okay.
It's true. Thank you so much, Simon.
All right, guys. Well, thank you very much for inviting me. And yeah, you got my information. Let's do a bunch of business and help a bunch of people.
For sure.
Great job.
Thank you so much.
Thank you. Pleasure meeting you guys. And I'll talk to you guys real soon.
Sounds good.
Bye.
Bye.
Bye-bye.